The Economic Club of Minnesota's mission is to provide a world-class, nonpartisan forum for national and international leaders in business and public policy to discuss ideas that affect how Minnesota can better compete in the global economy. The Economic Club of Minnesota, engaging the world, strengthening Minnesota.
Good afternoon. Thank you, Steve, for those kind words, and thanks to the Economic Club for inviting me to share Target's story. I was asked in the reception, what I'm going to talk about, or if I'm going to talk about Canada, and yes, I will talk about Canada, but that'll come a little later. Today, I want to talk a little bit about the retail industry, as Steve said, and then I want to tell you about our story as it relates to our mission, who our guest is, how that guest is evolving, what our strategies are, key priorities, and then kind of what's keeping me up at night and our team up at night, and where's the future of retail headed. As Steve said, by the look of this slide, which is quite the eye chart, that's the intention. We do compete in the heavyweight division, and there are a lot of competitors. This group of 19 companies represents $1 trillion of U.S. revenue, and we define our marketplace as having about $2 trillion. So this is about half of who we compete against. But we compete against large global companies. We compete against local companies, brick and mortar companies, digital companies, online, you name it, restaurants, anybody that consumes dollars is somebody who we view to be a competitor. And we've got to compete and effectively compete against all of these companies. Here's where we fit. You can see Walmart on the left there, the big giant. They do $274 billion in annual sales in the United States. Target does $72 billion. We're the second largest general merchandise retailer and fifth overall retailer in the United States. $72 billion in sales, about $5 billion in operating profit, $3 billion in net income. Actually, it was $2,999 million. We were $1 million short from getting $3 billion this year. I don't know how that happened, but it did. Our profit model is a 10% EBITDA rate, 7% return on sales, and about 14% return on invested capital in our U.S. business. And we only have a 3.2% market share, even though we are the size and the scale that we are domestically here in the United States. We also are a very philanthropic company, and this is, we inherited good DNA and good bones from our founding fathers, and back in 1946, they had the wherewithal to make this a key part of the DNA of Dayton Hudson and now Target. We give a new milestone over $4 million a week, which is a couple $100 million a year. Since 1946, that total has been $2.6 billion in total. We've made a commitment in education to give $1 billion by 2015. And when you look at how we give that money, approximately 50% of that is for education and primarily K through 3, and the balance is in food and then other arts and social programs. Thank you. We have 184 domestic stores. This is a picture of a store that we relocated in California, and it's a single raised level store, and you can see great architecture, parking underneath. As the world shrinks and real estate becomes less and less available, we have to go up, not out. And so here's an example where we found a great demographic area. We were able to put in a great looking store. I'll talk a little bit more about Canada a little bit later, but we just opened our first 24 stores in Canada on the way to open 124 this year, so we're really excited about that. We will have at the end of this year 375,000 team members. So we are a very large scale employer from an employment base. We have over 30,000 team members in the state of Minnesota. We have 16,000 in just the Minneapolis area as part of our headquarters. And that does not include the leverage and the countless other thousands and thousands of others that we do business with. I mean, there is a whole infrastructure that supports Target, our partners, thousands of vendors, service providers. So when you think about the economic impact that Target brings, you have to think far greater than just the 16,000 team members and what we mean in Minnesota. It's all of the parties and the partners that help make us a successful company are all co-located here in Minneapolis to help support our business. For example, P&G alone has 75 people here in Minneapolis just supporting the Target business in addition to the team that they have in Cincinnati. We have more than 30 global offices, the largest of which is in Bangalore, India, where we have a technology, data analytics, and reporting center where we have 3,200 team members. We have 1,000 contractors there, so it serves as a secondary headquarter. Now, all of you know Target as a retailer, and we are a retailer from the standpoint of we're great curators. We take millions and millions of potential SKUs that are available in the marketplace, and we distill them and we boil them down to what we believe to be are the best 80,000 SKUs that are in our stores at any given point in time. But we also are like a consumer packaged goods firm in that our private brands represent over 30% of our business and 40% of our profit. So not only are we curating from the best of the best, we have our own engine internally and our own vertical structure and design, development, technical, so that we can take technical and spec-ready packages anywhere in the world and support our own brand strategy. These 10 brands represent our power brands. They're all over $1 billion, so they're very important to us, and they cover all the categories from food to home to apparel. Lastly, the Dayton family also gave us a great logo to work with. This is one of the most recognized iconic brands or logos in the world. It stands for happy, fun, stylish, trendy, value, feel good. It's a feel good kind of a brand, and it's a great material to work with. So what's our mission? Our mission, and I'm going to read this, is to make Target the preferred shopping destination for our guests in all channels by delivering outstanding value, continuous innovation, and an exceptional guest experience by consistently fulfilling our expect more, pay less brand promise. Now that's a mouthful, so if I'm going to distill that down to the elevator speech, I would tell you that Target is all about being relevant. We have to be relevant in our guests' lives. We have to be integral, we have to be connected, we have to anticipate where our guest is, where she is heading in life, and we have to provide solutions. We've got to provide the products, the services, a convenient, fun shopping experience, and we have to do that, and we have to be the most relevant person or retailer in her life, or else she's going to go to one of the competitors, and there's a lot of really good competitors to choose from. So who are we trying to be most relevant with? In a nutshell, the center of the bell curve is somebody who we would define as being digitally connected, time-pressured, savvy moms who are increasingly Hispanic or a millennial. So that is the center of the bell curve, but we also are focused on guests in all different life stages. So when you become a newly independent, your shopping patterns change. When you have kids, your shopping patterns change. So we look for those key moments in life, and we try and intersect ourselves and make you more integral in a more important part of your life at those times where you're receptive to changing your shopping patterns. Here's another eye chart, but it's a really good chart, and it means a lot to us. In the upper right-hand corner, and all of you in this room, I hope, would be one of those VIPs, are those individuals or family households that visit us a lot and spend that proverbial $100 every trip. And if you're one of those families, you're a part of our VIP club, and that essentially is that top 4% of family households that represent about 28% of our business. When you add the enthusiasts, which are not quite VIPs, it's about 15% of our shoppers that generate nearly 60% of our business. So we have a multi-dimensional way of looking at all the guest segments and demographics and income levels, and then we layer it on against charts like this. And our goal is to move you to the right and to move you up. So even if you're a convenience shopper, and a convenience shopper is someone who has Target part of their routine every week, you're coming to us frequently, but you're not buying a lot, all of our individual marketing efforts are going to be focused on deepening your basket, broadening your shopping throughout the balance of the store. If you're a least engaged individual, what we want to do is change your routines and get you to visit us more often. So we have a marketing program that is designed to try and move all of these segments up into the upper right-hand side of the continuum there. Like I said, demographics is changing. Vis-a-vis the total population, as you look out over the next 10 years, and we're in the second year of that, this Hispanic population is growing at 3 times the national average. The 65 and older are fast growing, as you know, the boomers are going through. And the reurbanization of America, there are more people moving into the urban areas than they are to the suburban areas. So these are all implications that we have to deal with. These shouldn't be a surprise to any of you. These have been well chronicled, but it's something we think about. The big guest segments that we look at, boomers, Gen X, and millennials, very, very large segments. And if you look at where we are in 2010, boomers and Gen Xers were the big spenders. But what's going to happen over the next 15 years is the boomer trend is going down, the millennial trend is going up, and our challenge is going to be, how do we maintain the great relationship and harvest and nurture the relationships we have with the Gen Xers and the boomers while we want to over-index and embrace ourselves with millennials and Hispanics? So we don't want to race too far ahead and disenfranchise anybody, but we know that we have to go where the puck is headed, and the action is really clearly where the millennials are going to be. So we're shifting our business model, and we're really thinking about segmentation to how to make sure that we are aggressively going after the future customer while not letting up on any of the great relationships we have with our existing guests. So what's our strategy? Strategy is really fundamentally four things. It's differentiation, innovation, execution, and price. First, differentiation. You know, in strategy, either you're the low-cost provider, or if you're not the low-cost provider, you better have a different strategy because you'll never win on a price-to-price basis. And we're not the low-cost provider. And we learned that a long time ago, and so we've been on this journey to differentiate for some time. And that means virtually everything to us within Target Corporation. It starts with the physical plant in the store. We don't build cheap stores. If you look at what and how we invest in our store today, I mean, there's a lot of glass in the atrium and the visual elements that we add and the high levels of lighting and the shiny brand standards that we adhere to in terms of housekeeping and maintenance and just the cleanliness is really important to us. We clearly differentiate with merchandise. That's the most obvious thing that you would see. Because if everybody's offering the same thing, why come to Target when you can get the same thing somewhere else? So yes, we have to have the best of the best national brands, but we also have to differentiate, and we do differentiate with our own brands, our signature national brands, things like Converse and Champion and Calphalon, things that you can't get in our trade, but you can get at Target. We also differentiate with our marketing, the distinctive flair and that clever wink that our team puts into all of the commentary, or whether it's a print or a broadcast vehicle, technology team. All of the aspects of our business model hinge on, can we be different and better? Innovation is the second part of the business strategy, and when I was talking about, you know, at any given point in time, we have about 80,000 SKUs in our store. So we've done all this curation, but throughout the course of a year, we will go through over 250,000 different items come through our store. So it's a continuous pipeline of change, assortment, visual elements, end caps, point of sale. We have to set, reset, the apparel continues to flow. So innovation is really the sister to differentiation. So it's a continuous pipeline of innovation, because if you don't innovate, if you don't update, if you don't move forward, you're going to get left behind. And if you get left behind and you lose momentum, it's very, very tough to get in our business. So whether it's a experimentation with a new format like City Target, or it's new processes or handheld devices in our stores, or it's designing new fixtures, lighting, whatever it is, we have to make sure that we're on the leading edge of innovation. 3 is execution. The marketing, the merchandising, none of that matters if at the moment of truth we can't deliver in every store every day with every guest, with a very large geographic footprint from Northern California and Washington State to Miami. And what we strive to do is deliver a great experience regardless of where you shop with us. So we're maniacal about delivering great in-stocks, making sure that our team is engaged, we can help you find what you're looking for, we have knowledgeable team member help, that we create the kind of environment in store that it's easy to navigate and the businesses are logically arranged next to one another, and we don't make you hunt and find something, and we don't put the milk in the back of the store and do things that make shopping difficult. We try and make shopping easy. And then we try and have record-setting speed at the front-end checkout. And we want to make sure that we're being respectful of your time so that when you get up there and you're ready to check out, we have a very high standard in terms of a 1+1, and if there's a change in pattern or trend, or if it gets sunny when it was raining and people come in, we can quickly respond to backup help. So we know that it all comes down to execution, and it's a key part of our strategy. Lastly is price. Now, price really isn't a strategy, and I was even debating, do I even talk about price? But when you think about our brand promise of expect more, pay less, price really is the price of admission. I mean, it's the ticket to compete. And with today's technology and the consumer savviness and digital devices, everybody knows what the price of every product is. And so if you're not price competitive, you're going to get left behind sooner or later. So we've always taken the position that even though we have brighter stores and more well-lit stores and differentiated merchandise, we've always committed to be competitively priced in local trade areas versus Walmart. We shop 33,000 of those 80,000 SKUs on a rotating basis, and our goal is to be within 2% of Walmart. And we've really tried to commit to that for a long time. And all of our research says we're within 2%. Our guest tells us we're within 2%. Now we've added a price match guarantee both online and in store, which in those cases where we're slightly higher, we will match those prices. And when you layer in that 5% Red Card Rewards program, which I hope everybody in this room has, and if you don't, we'd be glad to sign you up, we win. We actually win on price. In the past, it was we were going to neutralize on price because we didn't think we could win the price war, and we still don't want to get into price wars, but we now win when you add that 5% Red Card Reward program on top of all the other good things that we do at Target. So that's really the embodiment of our value proposition. It's taking price, convenience, timeliness, the sense of discovery, the treasure hunt, the newness, the value, and put all that into Target, and what we try and do is deliver the best value proposition compared to any other retailer in the marketplace. So those really are the strategic tenets. Now our priorities are really 5. Growth, profitability, guest experience, team, and reputation. I'll spend virtually all of my time on growth. The first part of how we see that we're going to grow in the future is through the omni-channel or the multi-channel lens. Call it what you want, but the digital revolution is behind us, and whether it is at home, online, or with your mobile device, guests today, they want to shop anywhere, anytime, with their device, in front of the TV. They want to come to your store. They want to buy online, pick up in store. They want to go in store and maybe have it shipped from another store, or buy online and have it shipped from a multitude of places. And we have to transform our company so that we're thinking about the end-to-end, not just as a stores experience or an online experience or as a mobile experience. It's all got to be connected. So all the data elements, all of our systems, how we set strategy from one part of the company to the other, it's all got to be integrated together so that it makes sense for the guest. And the majority of the growth, the retail growth in the future, is in the digital channels. I mean, the retail brick and mortar or land-based business will grow, but it will grow at 2 or 3%. And the marketplace in terms of digital will grow at somewhere in the neighborhood of 15% for many years to come. So that's a key priority of Target. Number 2 is really investing in the base business. If you don't invest in your base business, over time your assets will become outdated and it will not be fun to shop in your stores. So the 2 key priorities that we have placed to enhance our base business is really around our 5% Red Card Reward program and our P-Fresh full store remodel. And what P-Fresh did is it basically was the handle that said, we have a great store and we do a lot of things well, but we were a little bit over-indexed on the differentiated side of the house, and we didn't have a strong enough commitment to frequency-oriented businesses. And in particular, we were a little weak in food, and particularly fresh food. So we embarked on a program about 5 years ago to say, hey, this is a deficiency. Let's go through our entire general merchandise base of stores, and let's layer in this big commitment to food, including fresh food, adding the supply chain and the fresh distribution centers to support that strategy. And that's what we set out to do. We've now gone through about 1,200 of our 1,500 general merchandise stores, and they're virtually brand new stores. Because not only did we bring in the food when we were going in and remodeling the stores, but we relocated everything in that store and brought it up to our latest prototype standards. So electronics moved, toys moved, and we put everything together where we wanted to put it into worlds. We added a pharmacy if it didn't have one. We added a Starbucks if it didn't have one. We changed out all of our apparel fixtures, carpeting, lighting. We freshened up the entire store. We spent $3 to $4 million a store, and over the last 5 years now, we've spent billions of dollars updating our asset base, and our chain of stores has never been fresher. It's never been, we've never had as many stores as we have today with as youthfulness, as I would say, as we have. So we're really excited about investing in our base business, and P-Fresh has been a big success. Third growth strategy of ours is around a new banner called City Target. Now there's a lot of real estate in dense urban areas that just can't fit a 10-acre parcel with a 135,000 square foot Target on it. So we sought out where are the best demographic areas and how do we alter our prototype to make it fit to the urban landscape and customize the assortment to those urban dwellers because they're in a different life stage than the suburban people. So we set out basically taking a store and we shrunk it virtually in half. Most of these City Targets are half to 2/3 the size of what you might expect to see at a Target either downtown or any of the stores in the suburbs, and we shrunk the SKU base by 40%. But we didn't change the breadth at all. What we did is we went through SKU by SKU to make sure that what we took out were the things that wouldn't sell in those markets. Big bulk packages of paper, you know, the Costco club size paper towels where you get 18 rolls and you get bonus buy for 26 more and you put it in your cart and you can't get anything else in it. So we went through big areas, paper, pets. We don't have 20 and 30 and 40-pound bags of dog food. We don't sell patio sets. I mean, it's tiny little grills and a bistro set, but we're not in the patio business. So we went through the store, business by business by business, to say, how do we shrink that and give the best experience in a small footprint? We've got 6 stores so far, and so far they have done very, very well. And these are great demographics. These are urban dwellers that are highly educated and they're affluent. They're right in the sweet spot of our guest. I'm going to rip through a bunch of pictures of what some of they are to give you an idea of what they look like since we have none here. This is Seattle's Pike Place. City Target right off the UCLA campus in LA Westwood. LA Central. LA Beverly. San Francisco Central, and you can see the orange windows. We're testing our C9 activewear apparel standalone store next to that. And here's our store 2 open in Portland, in the Portland Galleria. So we're really excited about where we are with City Target. Now, Canada. Canada has been just an incredible endeavor for us, and I'm proud to say we grand opened our first 24 stores last Friday, so this is about as fresh news as it comes. And really the lens that we took a look at Canada was this. We've wanted to go to Canada for many years. We knew Target would be right for Canada. We knew Canada would be right for Target. But we could never find the right economic proposition to make it all work. And this was the time where the sun and the moon and the stars all aligned together, where we were able to gain the kind of scale that we needed to gain so that we could offset what we knew would be a very big investment. So this was a basic classic case of go big or go home, because we knew if we didn't get this particular transaction, other retailers in all likelihood would pick up all of these leases, and we might be boxed out, hypothetically, out of this market for many, many years to come. So this is one that was really one that we wanted to make work. So what we had was Zellers had 276 leases, of which we had an option to buy up to 220. We selected 189. We then disposed or sold 55, and we kept the best 134. We reviewed 12,000 pages of legal documents in about 3 weeks to go through every one of the provisions and decided, great, this is the right economic proposition. We're going to be able to gain scale. We're going to be able to generate the same kind of shareholder returns because it's all about shareholder returns. So that's what we committed to with our board in January of 2011. And since that time, it has been a sprint. We've had to build out the infrastructure, and that means we've had to transform every one of these old assets, and it was stem to stern. I mean, we went down to the studs in every one of these stores. We thought we could only expand 4. We're going to be expanding 40. We had no distribution capabilities. We built 3 distribution centers, the 2nd, 3rd, and 4th largest distribution centers in Canada in less than 18 months' time with the help of a great partner, Ryan Construction, who's done a fantastic job for us in that and a lot of other projects. We had to get a headquarters. We had to get a lot of infrastructure in place in a quick period of time. Technology, which is always the longest lead time, most complicated thing that any of us do, right? And we decided not to extend our domestic system and to go all new with 4 very large new enterprise systems. One on the front end with a company called Retalix, the warehouse management system with Manhattan, the underlying bones of the system with SAP, and then a replenishment with a company called JDA. I don't think any company ever has put 4 big enterprise things together and made it work in the time that we were able to make it work. And thanks to Accenture and McKinsey and some of the other partners that we've had along the way, we were able to accomplish something that was really nothing short of spectacular. The team, we didn't have a team that was, waiting to be tapped on the shoulder that says, hey, we're here for Canada, let's go. Today, we have 750 Target team members in our Canadian headquarters, 95% of which are Canadian. We have 950 people here in Minneapolis that support Canada on a full-time basis, and we've already hired our first 10,000 team members in the stores. So we've had to create culture, team, again, in a speed is life manner. And the last lens really is what I've been talking about. It's the speed of which we've had to do all of this. I mean, the gun went off 2 years ago in January. We've opened our grand opening stores. I have been in 14 of those stores in the last 2 weeks, and I'm telling you, they look fantastic. I mean, the team has done an amazing job. So far, the Canadian consumer has loved us. We're off to a fantastic start. We tried to have this quiet little pilot store in the middle of nowhere to run the bugs out and test the systems. And let me tell you, everybody in the GTA came to that store. And it was like Black Friday for 3 weeks in a row. And here, we thought we'd be really clever and test everything out and give the team a little break. And all we did is we subject them to some of the highest volumes we've ever experienced in any store. So it's early. We've opened the first 24. We've got 24. We've got another 100 stores to go. We're opening 5 cycles this year. But we're really excited about where we are. Profitability, really important to all enterprises. It's particularly challenging for us because of our comp shop process, price match guarantee, competing from everybody from Amazon to Walmart. Our P-Fresh over-indexes in the lowest margin businesses that we have, and that is paper and chemicals and food. And then you layer on that 5%. That puts a lot of pressure on the profit side of the equation. Our team's done a great job of really offsetting that. 3 is the guest experience. I talked about that. 4 is our team. Everything, it's about our team. I'll talk a little bit about that later. And lastly, our reputation. I mean, we really care about our team. We really care about our communities. We really try and do the right thing. I mean, we're a classic Minnesota company that really wants to do the right thing, and we really work hard on not only managing our reputation, but earning the right kind of reputation. So, future retail. There's a lot going on in our business, and I've been with Target for 33 years, and I can only remember one other time that there's been this much change, and that was when Walmart was on their growth trajectory and everybody thought they were going to take over the world. And in certain respects, this is even more tumultuous at this time than it was back then because of what's happening with a lot of different companies. First of all, I would tell you that the health of Target has a lot to do with the macro environment. Retail environment represents 2/3 of the U.S. economy. So when there's good policies that make up for a healthy consumer, all retail does well, Target does well, and when it doesn't, it's in a market share game. And we've been in a market share game for the last couple of years. So unless the housing market, continues to rebound and unemployment goes down and incomes go up and confidence levels stay high, we're basically in a hand-to-hand combat in trying to figure out how to gain share. I talked about bridging the guest to the future. We have got to get this millennial guest. We have got to make sure that we over-index with Latinos, but we have to do it and make sure that the current shopping core base that we have at Target is still happy and stays with us for as long as we possibly can keep them in the fold. 3 is we live in this multi-channel environment, and these digital devices have changed the world and have changed the world forever. The power is with the consumer. Everything is transparent, and that's the business that we're operating in. I talked about this massive disruption and convergence, and what I mean by that is you have physical stores, you have online, you have mobile, you have entertainment companies and technology companies, all competing for the same consumers, all wanting to get in the commerce business, all at various stages. So it's a challenging time to find out who's the right partner, who's going to be a competitor, who can you align with, because everybody is running to other people's spaces. And so there's a tremendous amount of change and churn that's going on in our business. So that means new relationships, new partnerships. Now, don't get me wrong, we love all the partnerships and what we've had in the past, and we've got a great group of Target supporters. But in the future, we have to align, especially as it relates to channel management strategies, those companies that align with our business practices and strategies and support where we're headed as a company. Two is online-only retailers. It's a different business model. They don't have the same investment in we do in stores and communities and paying sales tax and things like that. So they're a very worthy opponent and competitors, and they're changing the landscape every day and what it means to be a multi-channel retailer. And then also legislation and regulation. Because we have almost 375,000 team members, things that affect our labor force, healthcare, the combination, those are very important to us. And so we've got to have a seat at the table when it comes to legislative and regulatory action, because we want to make good legislation better and we want to make bad legislation less bad. And thankfully, with our reputation and credibility, DC and the state really listen to us, because we're honest, we tell it like it is, we say what works, what doesn't work, and a lot of the things that have come out, particularly in healthcare, that group has really listened to us as an employer to say, this is what can work and this is what isn't going to work. So we're very much in tune to what's going on in the legislation and regulatory environment. E-fairness, all we ask there is we want a level playing field. Don't pick winners and losers. I could go on forever on that one, but I'm not going to do that. So what does all this mean? Final thoughts is really, this is a time of challenge, but challenge means opportunity. And it means that there's a lot of market share up for grabs. Nobody is doing it all perfect or right today. So over the next 3, 4, 5 years, there's going to be a lot of share shifting that happens as people, figure this out, or those that don't figure it out get left behind. And we want to be one of those companies that figure it out and stay in front of the pack. The good thing is our guests love our stores. And so we're starting from a position of strength. And our stores, we know in the future, will be more than just a store. It will be a store and a supply chain depot. And that, I mean, it will be a delivery mechanism as we think about a multi-channel word. So we're evolving our footprints, we're evolving our formats, we're evolving the way we think about multi-channel and what we do in our stores organization. And we know that in the future, our stores have to be much more digitally savvy, and we have to have a far greater commitment to service, so that if it's not in our store, we can get it for them. And hopefully we can get it to them on Target.com. So this is about transforming while performing. That's the mantra inside of our company, is we've got to transform our business model while perform while we transform. And I'm highly confident that the Target team can make this happen, because there's not a better group of committed people that we have at Target. Lastly, what does all this roll up to? It rolls up to the roadmap of $100 billion in sales. This is our goal. This is our story. We are sticking to it. We want to get here by 2017, and we want to do it. And we want to deliver $8 a share, $7.20 from our U.S. retail operation, and $8 or 80 cents per share in Canada. And we are highly committed to getting there. In closing, I would be remiss without thanking two groups, or multitude of groups. First, the Target team. I'm the luckiest guy on the planet that I get the opportunity to lead such a great group. And whether you're in Target India or global sourcing area, or you're on an overnight stock team in a Target store, I mean, the Target team is just so committed. They try so hard. They care. And when we say squadron right, they go squadron right. So we try and stay aligned with everybody. And they are just an incredible team. And so hats off to all the team members today that I'm representing, all 375,000 team members. And then secondly, as you know, it takes a village to make this all work. And whether you're a service provider, and I made a call out to a couple of the companies here, but there probably isn't a company in Minnesota, and there's probably isn't somebody whose lives isn't integrally intertwined with Target. And we know that our success is highly dependent because of all the commitments that everybody else has made to our business, whether it's a company on the direct side of the business or the indirect side, or as a service provider, it's in the legal side of it, or HR. We win and we succeed because we have great partners everywhere else. So I just want to thank everybody in part of your companies and in the greater Minneapolis, St. Paul, and Minnesota communities that stand up for Target and do what they do every day to help us succeed in the marketplace. And I couldn't be happier that we've got a great village. So I appreciate everybody's support for Target, support of our team, support for our strategy, and hopefully in 27 we'll be able to ring the bell and hit those aspirational goals. But we believe they're very doable. We've been tracking this roadmap for a couple of years, and we're spot dead on it. It's not going to be easy, but I'm highly confident we're going to get there. So thank you very much for your time.
The Economic Club of Minnesota's mission is to provide a world-class, nonpartisan forum for national and international leaders in business and public policy to discuss ideas that affect how Minnesota can better compete in the global economy. The Economic Club of Minnesota, engaging the world, strengthening Minnesota.